Welcome back to ICT Trading Concept. How are you all? I'm very fine. Thanks not for asking me. So what I'm going to talk about today? Today I'm going to talk about the narrative, which is the most important thing for the trading. If you don't know what is the narrative, how every specific day price will react in the market, you have no idea. You're just gambling. You have no idea what you are doing. What else I can say? I have nothing to say. So it's the part of the PO3, ICT PO3. So I'm gonna make clear the Monday's narrative only to this video. The next video, I'll go for the Tuesday's narrative. That will be the manipulation of PO3 and also the Tuesday's narrative. What is narrative means? In Monday, where price will stay, you will know that beforehand. When you will know price will be in this range, it will be very easier for you to understand and to frame your trade for being so confident when you will take the entry. Okay, you have to stay until the end. You will understand Monday clearly through my video. Now you can say why you will watch my video where there are so many videos about PO3. Just watch the video and then you decide you will be benefited or not. You are already benefited or not. Okay, but I can guarantee you, if you're really serious about trading, you have to watch this video. Just spend some time, watch the video, then you decide what should you do. My intention is to provide you the education rather than getting your intention, to be honest, rather. So let's go to the video. Just assume that this is the weekly candle. Okay, so this is the open of the weekly candle. This part, it went higher, then it expanded lower until here, then it has closed over there. So this is the weekly candle. Our expectation is this week price will go lower, but will it go lower directly from here to here? No, every day price will act differently. Okay, so here in this video I will only talk about the Monday's narrative. I mean the starting of the PO3, accumulation phase of the PO3. I would like to give you the example from the chart. In my opinion, that would be easier for you to understand. Okay? I have marked this two line. Okay, what is this two line? This is Friday's high. This is Friday's low. Just try to understand the concept, guys, because this is the most important thing in ICT concept. Okay, so this is the Friday's high. This is the Monday's high. Sorry, Friday's low. Okay, and our Monday candle has started from here. Just let me mark the Monday's starting point. So over here. So from here to here, this is Monday's price action. We all know how to trade. I mean, in Monday price, how it will react in the chart. We all know. Do we? Yeah, we know, because we know the narrative. In Monday, price will actually stay inside the range of Friday. So Fridays, you have to mark the Friday's high and the Friday's low. You have to understand that price will stay inside this range. Now, you can say, brother, it actually went lower outside of the Friday's range. When we saw actually market went outside of the Friday's range, this is last Friday, okay? So when price will go outside of the Friday's range, it will be much more easier for you to take the entry, because you know price has to come back again into the Friday range. Most of the time you will see price won't go outside of the Friday's range. That is little tricky, but if you really know price will stay inside the Friday range, it's gonna be, much more easier for you to frame your trade in 1 minute chart. I am showing you from 15-minute chart because I love 15-minute chart, and from 15-minute chart I always place my I take the point of interest from 15-minute chart, and then I go to 1 minute chart. I show you the execution to my live streaming. Everything I'm showing you over there. So if you were interested, please join to my channel, join me one time in my live stream. Okay, so this is the narrative. In Monday you have to think this way, that price will stay inside the Friday range, but if it went outside of the Friday range, it can go lower or it can go higher. It will come back again into the Friday runs. Now, every time it will do that? No, not every time. You have to think 70 to 80% time you will see this thing happens, that price actually stay inside the Friday range. But if it went lower or higher outside of the Friday range, it will come back again into the Friday range. Rarely it will go outside of the Friday range and it will continuously it will go low. So this is the accumulation phase. It's called ICT accumulation phase. Here is the price action to the week. Our expectation is price will go lower. But here is the Monday. So Monday we will expect some kind of liquidity making things. And that is the thing happened over here. When in tomorrow's video I will explain the manipulation, you will understand why this is called accumulation. But for that you have to watch tomorrow's video as well. I can't make all every day in one video. In that case it will be very bigger, longer, and you guys will complain me, brother, you just make longer video, please make it shorter. So I will just complete the Monday's price action, and then I will in the video tomorrow I will explain the Tuesday's price action. Okay, Tuesday's narrative. Now let me go to the 1 minute chart. First, I will show you how to utilize the price action, the narrative for the execution. So you can say I don't trade actually the London session. I trade the the New York session. And after 9:30, I start to look for the entry. Okay. So there is 9:30. I have just marked the 9:30. It is already below the Friday low. When it is below the Friday low, my expectation is it will go back again into the Friday range. That is my expectation. Now, if you want to mark, take a entry over here, you have to look for something. First, it has to take some kind of sell side liquidity. Then it has to give you the market structure shape, and you will take your entry. You can see it has taken the sell side liquidity from here. I'll just mark this one as my sell side liquidity taken over there. Okay. So it has taken the sell side liquidity over there, and it has given me the market structure sheet over here. Okay. So when it has given me the market structure sheet over there, I have the fair value gap over here. But you can see market actually didn't came here, so that entry is not valid because it didn't came to the fair value gap. And now if you are confused about the fair value gap, which fair value gap you have to use for taking your entry, you can just watch the videos. I will put the link on my description. You can watch them and you can come back again to my video. You will understand which fair value gap is important, which fair value gap you have to use for your entry or for later use. Okay, I explained everything over there. Now if you see over here the price action over here, you will see it has actually taken the sell side liquidity from here. So that is also sell side liquidity taken, and I got my market structure shift over there. So this is my market structure shift. Why I am expecting higher price? I told you already, price has to come back again into the Friday range. So this is the Friday range. It has to come back again the Friday range. It went lower, and that actually made me more confident that market will go higher. Okay. So when I have got this market structure shift, I look for the fair value gap, and it will be confused why I'm making two fair value gap. Why it will be confused because you don't know the way you have to use the fair value gap. But if you just watch the videos, I will put the link to my description. You will understand why I will take my entry to this fair value gap. Why I won't wait for this fair value gap. Okay. So I will just take my entry over there. When I got my market structure shift over there, I will take my entry over there and just let market clearly. I will put my stop loss below the breakaway gap. This is my breakaway gap, and I will actually mark some kind of buy side liquidity, and I will go for that. Maybe this is your buy side liquidity. There is your buy side liquidity over here, and also you have the buy side liquidity over there. So you can go any of them. You can go for any of them. So just that should be your entry, and after that it's done. Okay. So now when it came here, I will start to think market will go lower again. Why I will start to think like that? Because I can see this is the Friday's high. As we have already went below the Friday's low, we should have stayed inside the Friday range. It can't go above the Friday's high because this is not the manipulation phase. This is the phase of the accumulation. So that's why when price is over here, very near to the Friday's high, my expectation is if I see any kind of lower run or lower setup, I will take that sell entry. Okay. So you can see our PM session has started over here. I mean at 1. At 1, it has taken so many buy side liquidity from here. You can just mark the buy side liquidity from here. It has taken the buy side liquidity, and then it has given me the market structure shift over there. So this is my market structure shift. After taking the buy side liquidity, I'm sorry if I told the sell side liquidity. After taking the buy side liquidity, when I have got this market structure shift to the lower part, just let me mark it. Okay, lower part, I will look for the what to say, the fair value gap. Okay, so where is your fair value gap? You can see there is one fair value gap, there is another fair value gap. You can see both of them, but I'm not concerned about them. I'm concerned about here. So there is two fair value gap, there is one fair value gap over here, and there is another fair value gap over here. So many entry setup you will find if you just understand what is the breakaway gap. Okay, now if you take this entry, it will be, I mean, very easier for you to take this entry. Now you can see it went higher and you will be stopped out. Just let me clear the things. If you take your entry over there, I mean over here, when it has come over here, and if you put your stop loss just above the breakaway gap, what I have done over here, if I do that, I will be stopped out, right? But look at the very good thing. Okay, our entry would be to this candle. Look at this candle, it went into the fair value gap over there. Okay, so that will be our entry, and our stop loss will be just above the breakaway gap, and we will target some kind of liquidity from here. Maybe we can just mark this low. Okay, just for example, we will mark this low as our sell side liquidity. Now look at the risk reward ratio. It's near about 1:3 and 26 handle. Don't think it's very small run. Okay, it's a very huge run. I mean 50 handle, one contract is equal to $50, so it's huge. Okay, so that should be your entry. Now over here, that is different thing. I actually explained all of these things in my live. So if you are interested to join to my live, I can assure you, you will be benefited. And I really recommend you to come to my live streaming one day. Okay, and trust me, bro. Just trust me. You will stay. You will come every day. If you are really very serious about the trading, you can join me. Otherwise, I will tell you to stay away from me, because all I'm going to give you is the price action. What will make you like the market maker? You will get everything perfectly, and you will see same thing again and again to your chart. So that's all for today. I mean, this is the narrative. The thing is, our expectation has to be market will be inside the Friday range. So this is the Friday range. Just let me remove all other areas, because that is distracting me. So I'll just move. Okay, so this is Friday's low, this is Friday's high. Our first expectation will be price will be inside this the Friday range. But if it went outside of the Friday range, it will come back again into the Friday range. And when it will come back again into the Friday range, it will not break the Friday range again. That should be our expectation. Okay, so that's all for today. If you are new, please subscribe to my channel, give me a thumbs up. If you like my video, share my content, and cheers. See you guys. Bye bye.